Hello to all you passive income investors looking to generate passive income through dividend stocks. I think it's an excellent strategy, by the way. So in this video, I've got 10 dividend stocks that I think make an excellent buy for February of 2024 and beyond. In fact, this is the list of 10 top dividend stocks I launched in January, saying that it's the top 10 dividend stocks for 2024. So if this is your first time to my channel, this will be the first time you see these 10 stocks. But if you're a returning viewer, you may already know these 10 stocks, but I'm going to provide an update to these 10 stocks, let you know if I still think they're all a buy or if I'm changing any of those. And I'm going to provide an update on the performance of these 10 stocks versus the S&P 500 dividend ETF, the S&P dividend ETF. Now, I know dividend stocks have had a difficult start to the year. The ETF is down 0.87% so far year to date as of this recording on January 26th. So passive income investors may have a rough start to the year. Thankfully, my group of stocks have performed better, and I'll show you by just how much. Let's take a look here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so I'm going to go through my list of stocks in two batches of 5. So the top 5 here, or I shouldn't say top 5, the first 5 is Visa, Altria Group, Nike, Starbucks, and eBay. The one with the highest dividend yield is Altria Group at 9.54%, although Altria Group is one of my least favorite in the top 10. My favorite, my absolute favorite, my top dividend stock to buy for the year is Visa. I said this in January. I still think that's true. I think Visa is my favorite dividend stock to buy so far year to date. Nike is also in my list of top 10 stocks to buy. Nike has had a rough start to the year. I think the rest of the year will look better for Nike, and similarly for Starbucks and eBay. Dividend yields of 2.37% for eBay, 2.33% for Starbucks. But remember, like I usually say, when you're investing in dividend stocks trying to generate passive income, it's important to look at valuation, which I think all of these stocks are trading at attractive valuations, and the potential for dividend growth long term, which I think these stocks do have potential for dividend growth longer term. All except Altria Group. I think Altria Group's dividend per share will likely remain roughly around where it's at here. But the rest of these stocks, I think, have an excellent opportunity to increase their dividend per share over the next 5 and 10 year periods. All right, the next group of 5 includes Target with a dividend yield of 3.07%, Coca-Cola, the Home Depot, the Walt Disney Company, which only recently restarted its dividend after being paused for several years because of how devastating the pandemic was to its operations. Dividend increasing coming soon, I think, for Walt Disney Company. Its cash flow from operations are soaring. Management said 2024 cash flow is going to be even better. So I'm very optimistic about Walt Disney Company's dividend per share growing. And finally, Caterpillar with a dividend yield of 1.7%. So those are my top 10 dividend stocks to buy now in February and for 2024. Let's look at how they've performed so far. So the first batch of 5, not very strong. Only 1 out of 5 in the positive. You have Visa with 2.98% return so far. Then you have Altria at negative 0.17%, eBay at negative 3.12%, Starbucks negative 3.47%, and Nike at negative 5.48%. Like I mentioned, it hasn't been a good start to the year for dividend stocks. But my next batch did better. The Walt Disney Company, 5.59% return so far, 2.36% for Home Depot, 1.86% for Caterpillar, 0.7% for Coca-Cola, and the only negative in the group is Target at negative 0.25%. So 4 out of 5 in the positive here. So overall, 5 and 5. I'm batting even here. 5 out of 10 positive, 5 out of 10 negative for these stocks so far this year. Now, if you look at The S&P 500 Spider Dividend ETF, SDY, the price change is negative 0.87%. Negative 0.87%. So it hasn't been a good year for dividend stocks. The ETF is down as well. Let me share with you how my dividend stocks have done on average and compared to the S&P dividend ETF. So here are the returns for my 10 dividend stocks. They're listed, and then the average out of all 10 is 0.1%. 0.1% so far year to date. Underwhelming performance to be sure. However, if you compare with the S&P dividend ETF of negative 0.87%, I'm significantly outperforming the overall broader dividend ETF. I'm outperforming by 97 basis points. So if you went with the dividend ETF, you would have been down 0.87%. If you went with my 10 dividend stocks, you would have been up 0.1%. So at least you would have outperformed significantly against the ETF if you would have went with my top 10 dividend stocks. Now, I forecast that the rest of the year will be better for the overall dividend ETF. And likewise, I think the performance of these 10 stocks will be better than the 0.1% they've returned so far year to date. Now, this is different from if you watched my videos on my top growth stocks to buy and my top stocks to buy overall. So far year to date, those two have significantly outperformed, and the annualized performance is phenomenal for growth stocks year to date and for my top stocks. So in those videos, I said, you know what? Don't expect these kinds of outperformances to continue. I'm lowering expectations for those stocks that I've recommended. But for the dividends, I think the dividend performance is more likely to do better than 0.1% monthly for the rest of the year. I think this is an underperformance of its expectations for year to date. And so I think there's going to be mean reversion, and I think the returns will improve both for the broader market index and for the 10 dividend stocks that I've picked specifically. So I don't think the year is going to be negative for the S&P dividend ETF. I think it will turn positive. I think it will benefit as the year progresses, as the Federal Reserve signals and maybe cuts interest rates. I think that makes dividend stocks more attractive. And so that could be a catalyst that boosts dividend stocks later this year. So hopefully I helped save you some money by avoiding the ETF and going with my top 10 growth dividend stocks, I should say. I did outperform the index, although I understand 0.1% is not very exciting. It's not something you can write home about. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.